Thanks for joining us for another episode of Navigating Carbon, your compass to carbon management. As always, I'm your host, Deb Ryan, and for our first episode of 2025, I was joined by Peter Gardett from Karbone. Peter is the head of research, providing independent market outlooks and insights for Karbone's clients. Peter and I discussed the factors that really ultimately tie back to transactions in the market. Some of these things include market outlooks for the different commodity markets that Peter analyzes, as well as how carbon and clean energy fit into these transaction decisions. We also talk about how regulation may be impacted. Peter also provides some of his outlooks in these different markets for 2025. If you enjoy our conversation, please make sure you like and subscribe to the podcast. But for now, sit back and enjoy my conversation with Peter. Hi, everyone, and welcome to the next episode of Navigating Carbon. Today, I'm joined by Peter Gardett. Peter, lovely to have you today.
It's so great seeing you, Deb. Thanks.
Yeah, you too. So we're going to start with a little bit about can you tell the audience who Karbone is, who you work for?
Yeah, Karbone's been around for about 15 years now. Got its start doing a lot of the carbon offsets trade and the voluntary markets that we're all familiar with. And then moved steadily from there. I mean, picked up a lot of business in renewable energy credits, environmental attributes, has expanded into clean fuels by way of LCFS. And then recently, we've made a big push into trading power and capacity markets as well. So
Very cool.
it's one of those things where it's just steadily picked up over time, expanding with the energy transition.
Awesome. And your role, within all of that that's going on, you're the head of research for Karbone. Can you explain kind of what markets you're focusing at and what's on your radar in your role with your team?
Yeah, Karbone is a trading-focused firm, so it does take some principal risk as well, but has traditionally also served as a broker. And they need someone who can kind of provide that, impartial market view, both for ourselves and for clients. So we both face the trading desks as kind of an independent provider of information and value and data and pricing information, but also face external clients as sort of the research arm that underpins a lot of the more complicated transactions that the trading desk might want to do.
Really cool. And yeah, just really helping your clients understand these markets and what's going on and so that they can, like you said, make those decisions with, with your insights and stuff like that, which is awesome. So
Yeah.
so I want to start kind of on the financing kind of side of this. And, you talked about how, it's obviously Karbone's a trading sort of focused outlook. And so we're thinking about transactions through all of these kind of conversations. But how are you seeing the markets moving in terms of whether putting investment in things like clean tech or thinking about their emissions and their financed emissions and some of that kind of stuff?
I mean, it's been such a staggering few years, right? We've gone from this through this period where the technology that underpinned changes in the markets just became fully widespread. It's like watching the shift from, for those who remember landlines to mobile telephony. Like it's that kind of just full technology revolution. It's very linked to emissions and to climate policy and all those components as well. But in many cases, the markets themselves are being transformed more by the uptake of the new technologies. So if you think about the way that, solar panels are known for their intermittency and their very low cost, but it's also, when combined with batteries, it creates a different kind of pricing dynamic. So there's this very interesting kind of underlying total fundamental shift in the way that energy markets operate. And that then has an impact kind of back on all of the traded environmental attributes and emissions markets. And so we've seen this big rush of money into the sector, trying to take advantage of that technology shift, trying to take position, because it's a long-term bet. If you're betting that the next 50 years of the energy world is going to look really different in the last 50 years, that kind of influences the kind of people who are taking these positions, what kind of things they're invested in. So we've seen a lot of private capital, private equity, private debt, as opposed to public equity, stock markets, and commercial banks, less involved than the private market side. We've also seen a lot of more, as part of that, more patient capital, people who
Okay.
are really going to hold on to these assets for, 10, 15, 20 years. This is infrastructure more than it is consumer facing. So sometimes we get this like back and forth about the valuation of individual companies. It's important to look at that. And I think from our side, that's the kind of trading that we can get involved in. But uh, what you're really thinking about is this big sectoral move and who can ride those different waves as the value rotates around different assets.
I like that term patient capital in
It needs
terms
to
of
be.
looking at that very long term outlook. Because a lot of the stuff in some of the sectors that you and I've looked at is not very long term. So I
Yeah.
like that. It's great. So, as people are thinking about investing in, and when we say clean energy technology, things like solar panels and some of the newer things that are coming down the pipeline, hydrogen, CCUS, and some of that kind of stuff. How do you see things like tax credits? And I know there's questions about the future of those and stuff like that, but how do you see that playing a role in financing some of these projects and how your clients or the market's looking at these as part of their overall decisions?
I mean, tax credits of tax equity has become an essential part of financing for energy infrastructure overall. There's sometimes this focus on the, renewable energy side of the tax policy because it's relatively new and because it's picked up scale so much. But tax policy is intertwined across the entire energy business, both on the fossil side and on the, if you like, alternative energy or new side of things. So we have seen a lot of pushback in some places. I think the new incoming presidential administration in the US has been very explicit about wanting to push back on some of the expansion of clean energy tax credits that came about through the Inflation Reduction Act and so on. What's really striking is that since the election in November, and I'm talking now at the end of December, we just haven't seen any kind of real hiccup in terms of transactions. Big capital allocators continue to act as though the tax code is going to proceed as it's been. I'm sure that there will be changes. Every administration, every Congress brings changes with it. But I think tax policy is part of an investment strategy. It's just part of what America does and how American infrastructure is financed. So we have continued to see deals. I think we'll continue to see deals. What difference that makes at the margin, there might be something there, and there probably will be, just given the history. But if you look at the history, the idea that we're just going to completely separate, investment decisions about energy infrastructure from the tax policy of the United States is never going to happen.
Well, I think one of the things that you said that's really interesting as well is that this whole infrastructure, whether it's traditional fossil fuels or these new emerging kind of markets and ultimately creation of energy, they're so intertwined and linked and some of that kind of stuff. And so this sort of notion that we're just going to throw the Inflation Reduction Act out, to me has always felt a little bit strange, but it seems like you're sort of seeing that on the financing side, that people don't think that it's just going to be this wholesale 180 to a certain extent.
Not at all.
Yeah.
I do think that you have new questions about some of the individual deals that get done. You have to have that additional layer of being able to answer that question about what it would look like if your individual tax credit, was changed in some way. But that's just another thing that goes into deal pricing. And frankly, from a deal closing perspective, interest rate assumptions can have a bigger impact on whether or not we can close something, as opposed to whether or not someone takes a view on tax credits.
Very cool. So you talked about at the top as well that Carbone really sort of started out in sort of some of the like environmental and trading and some of that kind of stuff. So how do you see that market kind of factoring into financing decisions and to transactions, and what are your outlooks in that space?
It's interesting. Renewable energy credits, so REC markets, and to some degree where those overlap with transportation fuel markets like LCFS, uh, have become really big. And I think it's something that I hadn't necessarily appreciated until I got to Karbone, how substantial they'd gotten, how high those prices were relative to where they used to be, how essential they've become as part of a project financing decision. you really account for the role of RECs and LCFS as a fundamental part of your, capital allocation decision and your decision to take on debt at a certain level or to monetize your asset. So those rec markets have gotten really big. And I think that there's this element of we think about how REX markets will adjust as much as we think about how the underlying energy markets will adjust sometimes. I'll give you an example. Uh, we're looking at the future for offshore wind in the United States, right? And on the Atlantic coast, the link between the your opinion, your take, your conviction around offshore wind to your conviction about REX markets, and then the impact on the underlying energy mix, it's all linked up. It's no longer this kind of, I think if you've been in the market in these industries for a long time, you perceive REX as something you kind of sprinkle on top and that's sort of the final 10%. It's now a core part of the investment process. And that's been an interesting realization for me.
Yeah. And is that also, I assume that's people that are generating racks to sell them, but also people buying racks as well.
Yeah.
Like I think people forget that it's still, again, people that aren't as familiar with these, at the end of the day, it's still a trading kind of commodity to a certain extent, even though it's sort of a certificate
That's why
versus
when people talk
physical.
about the idea that gas is kind of just going to come in and just like take over everything again, because I think there's a big role for gas. I'm very bullish on marginal gas. And, if you wanted to make a lot of money, owning an existing fully capitalized thermal energy plant is probably a good way to do it. But the idea that you're going to bring in a bunch of new gas into a bunch of markets that are structured around REX and, RPS, like it's just very unlikely. The economics become very complicated very quickly.
Yeah.
So they've just become a core part of the whole structure of how things get done.
Yeah, I like that. I mean, sticking with gas, I mean, the in my mind, the growth for gas is through export, so LNG. Like, how are you guys looking at some of the, we've talked a lot about the Inflation Reduction Act and the regulations here in the US, but there's other international regulations, particularly related to things like LNG and fossil fuels and stuff like that. So, how are you seeing that factor in, or are you seeing that factor into US companies and people investing in that space?
I mean, clearly there's going to be a bunch of LNG from the United States. I think you can just take that as given.
Yeah.
A lot of the marginal energy growth in the world is going to be met with U.S. gas. Here, I'm sitting in New York. As a country, the United States has a lot of gas. And there's just a lot of it to go around. I perceive that we will be able to meet both domestic demand and export demand without any difficulty. The question has really been about, is there a gas renaissance within the United States itself? And depends on how you define it. You do see a rebound from, a couple of years ago where it looked like maybe we were never going to build a new gas plant again, to a point where we are looking at several dozen gas plants getting built out, and those will be in operation for decades. But at the same time, a couple dozen plants as compared to what we would have seen 10 years ago. So that is, it's the energy transition in action. But to your point about environmental attributes, when you build a new gas plant, you have to take into account how you're going to offset the environmental, exposure there. And I don't know that that's even a discussion we would have had 10 years ago in the same way. It's
Even
very
2 or 3 years ago, almost like
correct.
so,
Yeah.
which is a big shift. So thinking around, what's coming. Like you said, we're sitting here in December, heading into 2025. What are your kind of takes for not just the environmental attribute side, but sort of the fossil fuel kind of gas expansion side and some of that kind of stuff? I'm curious what you're looking for.
Yeah. So we've already seen, I think, the kind of the the ball is rolling downhill, if you like. The avalanche has begun, to use a somewhat more dangerous feeling analogy, on renewable power as the core component of the electricity sector. So like it's just so cheap, it's very easy to add, and it's just the kind of thing where the more you add, the less competitive other forms of fuel become. So it becomes this kind of self-fulfilling prophecy. And we're getting to a point where, that is the dominant form of energy and everything else has to shape around it. I think we'll see a lot of volatility in what are called capacity markets, which is essentially trading future energy back and forth. Um, Simply because we're dealing with this new volume of intermittent power that needs to be matched to batteries or gas, and that matching process happens via the capacity markets to some degree. Uh, I think when it comes to other forms of clean tech that are on the molecule side, you do still see a fair amount of bioenergy and RNG activity, and I think I've actually been surprised how robust that has held up.
And RNG
Hydrogen,
for folks is the like renewable natural gas from like
renewable natural
landfills
gas.
and dairy farming and some of
That's
that
right.
kind of stuff, which again, I agree. Like it seems like such a small portion of the market, but it's definitely there and
Yeah,
continues to be there. So yeah,
absolutely.
yeah.
Um, But I think one of the most interesting things, I mean, I think core to all of this is demand technologies. So when I think about the next stage of this, I think a lot about EVs. I think the uptake level of electric vehicles in the United States, but also globally, is really the big question. Because if you begin to take less gasoline from refineries. People forget that crude oil just it's not something you can magically use. It has to go through this rather complex process. And then the crack spreads that are in the midstream are very delicately balanced. So what that means is you only need to get to a certain level of EVs before gasoline crack spreads start to fall apart, and thereby the midstream starts to suffer, and with that, the crude oil sector starts to suffer. So people talk about, oh, we'll get to a point where it's 100% EVs. We don't have to get anywhere near there. We don't even have to really get to like 25% EVs before it starts to hit gasoline cracks. And that creates this sort of ricochet effect into the legacy system that in the same way that we created this sort of self-fulfilling prophecy around renewable fuels, it's easy to see a tipping point where it just becomes easier and easier and easier to electrify the transportation sector as well. And I think that's a sort of red line for crossing into the next sector.
I think it's really interesting as well. Like it's this perception that it needs to be this 100% adoption. I think your point around the fact that it's nowhere near that is really interesting in terms of how we'll see, because it's the same on the renewable side, exactly like you said. We don't have 100% adoption of solar and wind and stuff, but it's still really core now to how we think about these markets. In terms of demand technology, I'm curious, and I know there's been a lot of talk around it, but do you also look at things like data centers and some, or do you think that'll be on the margins a little bit? I know that's more gas on the electricity side and stuff, but do you think that's also another kind of demand technology that we'll see shifting?
I mean, I think data centers are huge. There's no question. They're very power hungry, and they've
Yeah.
definitely. It's interesting that this technology set, this demand source, has emerged at the same time that we're reckoning with 30 years of underinvesting in power overall. So we were always going to have to spend a bunch more on power because we haven't for a long time. And at the very point that that's becoming very evident, we're also seeing this big additional sort of pedal to the metal on adding more demand. And the interesting, I would think the reason it gets so much attention is it's like a special form of demand. This is
Yeah.
very price insensitive. People are willing to sign huge long-term contracts. These are the richest companies in the world. This isn't like trying to decide if someone will turn on and off their air conditioner on the basis of high energy prices. This is stuff that's like very baseload demand, if you like. And I do think it's interesting that it changes the math for utilities. We'll see a lot of investment, no matter how you cut it.
That's really interesting. So, Peter, any final thoughts or anything before we wrap today?
No, I mean, I think it's been great catching up. I do think that there's this. Um, we need to remember these are global markets. It's very easy. I think you sit in the U.S. It's a big market. We're very sort of interested in ourselves, and it's very easy to pay attention. Something I often will bring back to mind: if you look at population maps or population growth maps, the whole future is happening somewhere else if you think
It's
about it
true.
from that perspective. And the way we interact with the rest of the world through energy, the way that we interact with the rest of the world through climate pricing and climate markets, it's going to be really core to how things develop, even over the next 10 years. We're not talking about the far distant future here. So bringing ourselves back out of that sort of this hall of mirrors we're sometimes in the US when it comes to energy markets, and remembering that we're part of a global system. That's what I'm trying to think of going into 26.
Yeah. No, I think that'll be a huge piece because I think as well, at least post-election, there's sort of this America First kind of sort of attitude that sort of, but it's not like that in these markets, and it's never going to be. So yeah, really interesting. It's a good reminder as we head into the new year. So
All right.
great. Well, Peter, thank you so much for joining me today. Yeah, I really appreciate your thoughts and your insight.
It was great speaking. Thanks so much, Deb.
Thanks. Bye.
Bye.